Hello, everyone. Thank you so much for joining us for another weekly wrap-up. My name is Jeremy Kronemeyer, Operations Manager for Wickham Financial Group. I have Graham Wickham here, President and CEO of Wickham Financial and Insurance Services. Graham, what happened to the markets last week?
Yeah, thank you, Jeremy. Thanks for our listeners jumping on another call. We saw the S&P 500 and the Nasdaq Composite gain about 1.5%. But the real story is the equal weighted value theme was really the outperformer. So we're getting that broadening out from the, let's say, the new economy, giving it up to maybe some of the older economy or the underperformers, if you might. So we also saw the Russell 2000 surge about 4.6%, driven by some rate cut hopes and some strong financial stocks that make up that particular small cap index. If we look at the sector performance, consumer discretionary rallied about 5%. That was led by retail. And then basic materials, they rose nearly as much, and they were supported by precious metals and their strength. On the commodities and going with gold and silver, gold was up about 4%, and silver spiked about 10%, with crude oil gaining about 2.5%. In the fixed income area, if we're kind of focusing on that Treasury yield area, that fell as non-farm payrolls missed expectations. But we did add about 50,000 jobs. Unemployment rate ticked down to about 4.4%, despite some layoffs with the government and some in the technology area. Fed funds futures still projected 2 rate cuts in 2026, first likely rolling out in June. Looking at some economic data, so we are looking at the ISM Manufacturing and Service PMI numbers. Manufacturing PMI numbers, 47.9. That's a contraction in that area. If we look at the ISM Service PMI, that's a 54.4. That was the highest that we've seen since October of 24. Consumer sentiment, that improved slightly, but near some record lows. So still a bit of pessimism out there, even though the markets have had just great performance, not just this last year, but the last 3 or 4 years. If we look at inflation expectations, we're looking at the 1 year at about a 4.2%, but the long term at about 3.4%. Now, if we look at trade and productivity, U.S. trade deficit in October was about $29.4 billion. Listen to this. That's the lowest since 2009. It's down about 39% month over month. And the Q3 productivity, that surged as AI investment cut some labor cost. On the global front, we saw European zone inflation slowed to about 2% year over year. Germany's retail sales fell to about 0.6 month over month. And China's CPI accelerated. It was its fastest pace in 3 years due to some food shortages, some PMI stayed in some deflationary areas. Now, if we're looking at the week ahead, and we're just looking at some political speak, some discussions, some things that are going on right now on the housing front, we have the U.S. government may buy some mortgage bonds to lower home buyers' cost. Possible ban on investment firms purchasing single-family homes. On the defense front, we're having a lot of discussions about a 50% increase in defense budget to about 1.5 trillion, and potential restrictions on dividends, buybacks, executive pay, all that being tied to delivery schedules. With policy and legal in that area, we're looking at the White House increasing pressure on the Federal Reserve, and the Supreme Court ruling will come out Wednesday, possibly Wednesday, about the legitimacy or the legality of the Trump global tariffs. On the economic calendar, we're looking at Tuesday. We'll have the U.S. CPI report. That'll be in key focus, and then we'll get retail sales, some housing data, regional manufacturing survey, and then we'll be looking at some auctions coming out for Treasury's earnings season. That's going to be really key. Usually the large major banks are going to start that off. JP Morgan will be the first one, really setting the tone for earnings season. And then we'll get into some international highlights throughout the week with China's trade balance figures and UK's monthly GDP update. Jeremy?
Graham, I had a question. You just mentioned earnings. Going into earnings here for the first part of this year, do you see earnings kind of staying on trend going into this first quarter here?
I do. Quarter to quarter is always a little bit iffy. But I think we rolled out earnings last year around 13 odd percent. I think projections this year somewhere around maybe 14. So we're looking at 2026 earnings to be higher than 2025. And listen, stock prices are going to follow earnings, all things being equal, and that would be good. Again, I don't know in the quarter to quarter, but I expect them to be reasonably good. I don't see any reason why they wouldn't.
Gotcha. Well, Graham, we always appreciate the information and expertise, and thank you to our listeners checking in with us every week. We look forward to seeing you next week.
Take care.